Monopoly by Grit.
Hello, everybody. Welcome to another episode of Monopoly by Grit. The federal government recently encouraged a lot of investors out there to go into new builds and new dwellings and start building and made them very interested in the building industry. And given it's a timely topic, we have someone from the building industry with us. Very welcome to Monopoly, the director of 98 Developments and also the co-owner of O-Build Building Group, Maroun Abou-Afech.
Thanks, Julep. Thanks for having me, mate.
Thank you very much for joining us.
That's all right.
So there must be a lot of questions out there for investors who has to change their strategy suddenly with all these changes that and the proposed changes that we're seeing currently. Before we go into all of that, tell us about your journey in the building industry. How did you get into this?
So good question, Julep. Many years ago, I actually started off in finance. I was a mortgage broker for a quite large firm. After a few years, I actually decided to leave that mortgage broking firm and open up my own business as a mortgage broker. I've always had that passion for property development, construction, whilst I was a broker many years ago. And I used to find myself being an active mortgage broker, doing my own developments on the side. And really, after a few years and after a few attempts, I realized that I was focusing a lot more on the building side of things as opposed to my own business at the time. So I realized that just naturally, I wanted to entertain going into, I guess, construction and really capitalizing on my passion, I guess. So yeah, started off as a broker and then now into construction.
So what is the what inspired you to establish this O-Build group and also 98 Developments?
So 98 Developments has probably been going on for a few years now, as I used to solely do my own development projects on the side. And then me and my business partner, Obi, we decided to join, I guess, maybe just over a couple of years ago now. He had obviously similar passions with me. And back in the day, he was actually a broker with me in the same office. So we kind of went both our separate ways. I went into my own business in finance and then he went into construction. And then later on just found the road again, you know. So we just decided to join ship and just go from there.
Mm-hmm. Proudest moment at the project, one of the projects you've completed?
Probably the biggest one that I completed under 98 Developments, Julep, would have been 2 townhouses in Templestowe. Just its challenges being on a main road, dealing with the amount of fall on the development was, I would say, quite challenging.
In a mint suburb.
So obviously expectations through the roof.
Yes.
So yeah, a lot different than what we're doing at the moment with this, more spec homes and stuff like that. But I think definitely, one of the biggest challenges was those two townhouses. Yeah, absolutely. Big size, semi-suspended slab, high ceilings, up to 4 meter ceiling heights in the living areas. So yeah, definitely did have its challenges. Yeah, absolutely.
And as someone who's personally seen those, I'd say very good job.
Yeah.
And what are the biggest lessons you've learned as a builder? Considering I'm assuming you've been in the industry for a few years now?
A few years now, yeah.
What are one of the biggest lessons?
I would say that the biggest lesson that we probably faced is that no two properties are the same. We've recently completed three units in Calcalo at the moment, and they're all mirror image of each other. But we realized that, not even though they're exactly the same, it's every building has its own problems and its own positive and negatives. And you can't build the same 2 houses the same. Everything has its own challenges, whether it be, soil works or finishes within the property or material shortages throughout the way, or you always got to obviously deal with challenges, and no 2 properties are the same, I guess. Yeah.
So in terms of, so I've myself lived in Brisbane, Sydney and Melbourne. So
Yep.
I think this is my final destination in terms of a residential city. Melbourne's interesting.
Yep.
How do you summarize that?
I feel like it's probably a lot to do with the local government, premiers of each state and what they want to achieve and where they see Melbourne going or Sydney going or Queensland going. So I think it is definitely interesting because there's a lot of external factors that influence the Melbourne market, I see. And obviously you probably would have seen coming from Queensland that, yeah, there's a lot of external market, like, external factors that create the derivative of where the market heads. So it's a little bit too hard to control, but I guess, yeah, you've just got to keep going and yeah, just go from there.
Yes. So, how do you think that, I mean, at the moment, the Melbourne prices are sitting at, we've seen the recent past, they were sitting around the fifth place in terms of median price in the country, in terms of the capital. How did we get there? And what is this necessarily a bad thing for investors? Where do you see this?
Look, to be honest, in my opinion, Julep, I reckon if we looked during the corona saga that we had in Melbourne, a lot of people were leaving just due to decisions by the local government, I
You
feel.
mean the state?
The state government.
Yeah.
Yeah, the state government. So I realized that, I don't know, just watching the news and seeing migration and where migration in Australia was heading, a lot of people were moving up north and, would rather reside in Queensland with maybe different restrictions from the state government. So it could have potentially commenced from that time back then where people wanted to migrate into a state government where they were getting more supported maybe. And I think maybe that's potentially affected Melbourne housing market. But if we have a look at where the market sits at the moment, Melbourne, as everyone knows, is quite a dominant state within Australia. And, a lot of infrastructure, a lot of employment, a lot of opportunity here. Cost of living, from what we've been told, is a lot less than, somewhere like Sydney. So we find that over time, I feel like the Melbourne market would recover a lot quicker than potentially any other market in Australia due to the infrastructure that it currently has.
And not to forget the infrastructure that they're putting in too.
They're putting in, yeah.
I think one of the reasons why some of the taxes are very high here, and why some of the investors have left this place, is because of all the infrastructure that's happening.
That's happening, yeah,
and
correct.
there's a lot of infrastructure infrastructure projects that are being undertaken in this state right now.
Correct,
So
yeah.
the Northeast Link is a big project,
one,
huge
yeah.
project, and it's going to make a hell of a difference in terms of transport amongst the east and the north of the city.
Yeah,
Right.
absolutely.
You did mention Kalkala. I just want to quickly touch on that too. What do you think of that suburb? You have done quite a few projects there, and how do you find it?
Look, for us, Julep, we obviously like to look at the numbers. We look at surrounding suburbs like, Mickleham, Donnybrook, even all the way up to Beveridge, Wallen, Kilmore. And we've seen that a lot of immigration has gone towards that region over, I used to work in Kalkallo nearly 10 years ago, Julep, and there wasn't a house there. It was only just to start it off this display homes and Stockland office and the old Callow office, and that was all that was there. But it's come a long way, and we feel like the way that Stocklands present their estates, we find that it is second to none. We find they're very competitive in the market space in comparison to other developers. So I think the reason why we particularly chose Kalkallo to do majority of our sites there is because we know that the infrastructure there, we know the price point is really good, really sharp. You could probably compare the same property from Kalkallo and Mickleham, and there'd be maybe a $50,000 to $100,000 difference in price. Now, it is a little bit further out. Traffic congestion is always a problem. Obviously, vacancy is slightly high at the moment as well. But we always look at where the future prediction's going to go. And what we find is that the amount of infrastructure that Stockland is pushing into the estate, they're spending, I think it was a couple of $100 million to put an on-ramp from Kalkallo direct onto the Hume Freeway. No other developer kind of has that pull or that leeway with, local or state governments, So they've obviously got a big push for infrastructure, and they understand the necessities around infrastructure.
And this is the largest, we're talking about the Cloverton estate
correct,
here.
yeah.
So this is the largest master
Master
plan
planned.
community housing estate in
Victoria, yeah.
And it is also home, which will eventually be home to about 11,000 homes.
That's right, yeah.
Inside this estate, there's about 6 schools from our knowledge.
Yeah.
And there's supermarkets, and this is all within the estate itself, which is very unique in some ways to
Absolutely.
compare to what we're seeing in the other parts of the other parts of the city. When you've sold quite a bit of established homes now, like you've built and you've sold them, not established, new homes. Do you see it more on occupiers or investors that are looking for this stock?
It's a good question, Julep, because I feel like owner occupiers, there's obviously a lot of appeal because there's a lot of properties around the 600, 650 mark in the area. But to be honest, we feel like still that there's a lot more investors that are predominantly looking in that region. All of our properties are sold to investments, to people that are buying it for investment purposes. So we haven't really dealt with too much owner occupiers, but in my time in finance working in Calcalo, I would say it would be about a 50-50 split between owner occupiers and investors. Yeah. Which is
Okay.
interesting. Yeah.
I'm going to ask you to be a fortune teller next.
Yeah.
Tell me, in your view, if I'm invested tomorrow, where are you? Which corridors are you predicting will have the fastest growth in Melbourne?
The fastest growth. I would definitely
couple of
say,
them.
yeah. I would definitely say I've always been a big advocate, Julep, as I've said many times in Geelong, in the Geelong region. Just the level of infrastructure, the amount of supply and demand, I guess, in the area, close proximity to the beach, CBD, many other facilities around the area will support a lot of people migrating to the region. There is a lot of vacant land, Armstrong Creek and surrounding suburbs, Curl Lewis, St. Leonard's, all those other areas where you can buy obviously a block of land and build a new house. But we find that the infill area in immediate Geelong, we find that, I'm at least predicting that there should be substantial growth over the next few years. And I don't know if I've mentioned before, Julia, back in 2019, I had purchased a property there and I paid $390,000 for it. And, you fast track 5-6 years, it's double that now. And it's just been natural. It's not like you forcing value on the property through a renovation or an extension or a knockdown rebuild. It's just
passive growth.
The same house back then and now is doubled in 5 years. And I feel like even at the price point that they're currently at the moment, there's still enough opportunity to double again. Now, when I look at particular areas like, for example, a friend of mine bought in Southport in Queensland, he paid $550,000 for the house in 2019 as well. That house value at the moment is probably worth about 1.2 mil. But when we're looking in history, to go from 1.2 mil to 2.4 mil is very difficult.
Yes. It's very slow.
It's very slow.
Very slow.
And I feel like the bank definitely needs to support a lot of people, a lot of investors, or, a lot of home buyers to potentially reduce rates so people can afford that $2.4 million budget. I feel like to double at that 1 million range is quite difficult Australia-wide. Whereas you look at Geelong, you can still buy on the fringe of Geelong, places like Corio, Nor Lane, Lovely Banks, Bell Park. You can buy, properties around there for still around the 600 to 700K. And I feel like very easily that could double to, 1.4 million, in hindsight, So if I'm looking at the low level game, if we even look at Ballarat or Bendigo, back then you would be able to buy a house for 200,000. For that to double to 400,000 is very, very possible. Whereas, you go to somewhere like Templestowe, you've got a, house for 1.8 million. To get to 3.6 million might be very challenging, might take time, it might take 20 years. So I think for us, I always look at the path of least resistance, Julep. And I find that the path of least resistance and to force, equity onto a property just naturally, not with us, doing a development or doing an extension or renovation, just the market naturally progressing in the area, we do find that Geelong has all the infrastructure to grow, to support, people and, obviously have enough workplace for people to work in and to keep the economy flowing. We find that the economy there is quite strong. We found that it's been quite strong for many years, but it's just been undervalued by, I guess, a lot of Melburnians. But if you look outside of Melbourne, that's definitely
one
a
of the
place
hot
I'd
spots.
look into. Yeah,
Definitely
absolutely.
one of the hot spots is.
Yeah.
Do you find that, technically your advice to an investor is that get in low, at a more
Cheap
lower
rate.
price, cheaper price bracket,
Yeah.
and because the chances of that going up rapidly is far higher than something over 1 mil. Is
Absolutely.
what you're saying.
Yeah.
In terms of affordability challenges, do you find the types of homes people are trying to build now different to what they used to do in the past?
I think it's a good point, Julep. Absolutely. I remember back in 2022, Calcalo normally used to develop, or a lot of the developers in the northern regions of Melbourne, they used to develop a lot of land around the 350 square meters and above. And I remember in 2022, Stockland in Cloverton Estate, they developed blocks that were 178 square meters. And that was a completely new product to the market. Everyone was saying that that's way too small. It's like it's like a glorified apartment or things of that nature. But I feel like as the banks tightened their lending capabilities, I feel like a lot of people were forced to result to have smaller properties, smaller blocks, smaller build. So I feel like as time goes on, it may get smaller. The subdivision might get smaller, the houses might get smaller, and absolutely, before no volume builder had a 12 square product where you could build a property that's only 12 squares. And I think recently Sheridan joined the market, Sheridan Homes joined the market where they would supply a 12 to a 13 square product, but all the volume builders didn't even have a design for it. So I think that as time has gone on, Julep, where people's affordability has gone down quite a bit and their borrowing capacity has gone down, they've had to result in improvising, and I guess accepting a smaller block and a smaller build. So definitely massive changes since 2022 and now for affordability
So what's
purposes.
if I ask you the question to put a 4-bedroom house on, what's the smallest amount of land you need?
Look, the three that we've finished off in Calcalo, Julep, they're 213 square meters. So yeah, 213 square meters is quite small, but depending on the frontage and depending on the orientation will determine what you can get. But if it's the right orientation, right frontage, you can get, 4-bedroom home on a 213 square meter
213
place.
square meters. So in terms of the building costs, you're one of the right men to ask the question.
Yeah.
How has the building cost changed over the last 5 years?
5 years, I would say it's definitely gone up, Julep. I would say in the last 4 years, it's remained quite consistent. I would say if we're looking back 7 or 8 years ago, it's gone up a fair bit from that time. But if we're looking only in the last 5 years, definitely has gone up. And the reason what we're kind of finding, Julep, why it has gone up so much is because we're talking about all these government projects. And the issue that we're facing as builders is that a lot of people are going to these commercial projects because the award or the rate that they're getting paid is way higher than anyone would pay in residential. So what we would find is that a carpenter, for example, might earn, 80,000 or 90,000 a year as a qualified carpenter. They're going into the commercial space and working on the government projects, and they're probably getting paid in excess of 150 to 200,000 a year. So a lot of these people or these skilled trades are going from residential into commercial. And what's that leading us is that the trades that we're trying to find, we're having to make a bid against them going to government projects and them going into residential projects. So essentially, we need to entice them to stay on the residential projects by paying them more money. So I think coincidentally, what's actually happening is, Julep, is that, let's say, for example, the frame, to do these Calcala houses normally used to cost us about 3,500. Now we're paying about 6,500 for the same product over the last, 2-3 years. It's because a lot of these trades are going to commercial, and for the owner of the carpenter business to kind of keep these trades, he needs to pay them more to obviously prevent them from going to commercial. So what we're finding is that along the way, tilers or painters or whatever it may be, they're making that transition from residential into commercial. So to win the work in residential, we need to pay them more. So we're finding that the issue that we're having is that, we might have been able to build a house for 200,000 back in, 3-4 years ago. But due to the government jobs or the commercial jobs, we're paying 230,000. Now, you might say maybe 30,000 is not too much of a big deal, but that 30,000 needs to get passed on to the consumer. So if we're, ideally looking at an X amount of profit for the development, we need to now increase that profit by 30,000 in order to compensate the expenses that we've had to outlay to try to get these trades,
Yes.
if that makes sense.
So you're at this stage, you're predominantly referring to labor charges.
Labor charges, yeah.
So there's also a material increase.
Material have increased, but they fluctuate significantly, Julep. If we look during COVID, obviously we had a big issue with timber shortage. And, having a look at those issues, Yeah, it was very short lived, Julep. It would last for about 6 to 8 months, and after that, timber was in influx, and we had enough timber, and you know, supplies always fluctuate up and down, but majority of the build is just labor cost.
is.
Yeah, it is
Okay.
absolutely heavy on labor cost. Yeah.
So what are in your view, like I've seen my friends make some silly mistakes when they go into building in the past.
Yeah.
What are the common building mistakes people make when they do go into new build?
I would say probably the design stage, Julep. Design has I'd say a massive responsibility in the price and in the deliverance of the development. As a builder, look, we don't do client work, but if we were to do client work, we would take control of the plans from start to finish. We have our own building style, Julep, so we like to design the way where engineering is at a cost of a minimum. We try to eliminate as much steel as we possibly can from the development. Steel is quite expensive, and again, the labor around steel is quite expensive. So I think the design of the development is probably the most crucial. Um, and we see it time and time again where people have the design of the development can be achieved, in another way, but in a lot cost effective way. So we find that, the design or even the site conditions, Julep. So if we're talking back about Templestowe again, the site that, I did a few years ago, that had about 3.5 meters of fall on the property. So every property has, site conditions that we need to obviously look into. Some areas have, significant amount of rock beneath the soil. So yeah, just site conditions. For example, Geelong, we've purchased a site in an infill area where back in the day there used to be a landfill. Now, landfills, as we know, they can release gases into the soil, and over years they can keep compounding and spread further and further. So soil conditions in Geelong sometimes are not necessarily the best, given the condition of the land many years ago, being an ex-landfill. So I think a lot of people don't care too much about the design. I think they care about, let's just get the site, let's just build it, let's sell it, and let's hope. And I feel like the hope is what is a lot of developers or investors struggle in, because they obviously like to foresee the future, but you can't work like that, if that makes sense. So the design, the soil conditions, the type of property is probably more important than anything.
So you had to
Um,
have some serious thinking going in
Absolutely,
at
yeah.
the start of the process, is what
Correct.
you're saying, rather than
Correct.
hoping for the end will be nice. isn't it?
Correct. Yes, that's
Yeah.
right.
So how can buyers protect themselves? Like, let's say if it's a consumer and in the middle of the building process, some of the costs go up. How do you think they could protect themselves from not? We've heard some nightmare stories.
Yeah, that's
about
right.
this.
Yeah. Look, I think if it is a private builder, Julep, I think the relationship with the builder is very important. We find that we don't do any client work. We're not really sure about conversations that I had, but I think a lot of people, when they purchase a block of land, they give the contract to a conveyancer, the conveyancer reviews the contract, and they go from there. But I think that the best method for someone to build, build with a volume builder or a private builder, is to always have a solicitor or a conveyancer to review the contract and make sure that it's in favor of, the person constructing the property, being the vendor, being the developer. So we find that no one ever does that stage, or people just sign the build contract and then off they go. But I think that, you need to have high level consultants around you prior to taking on a decision like that, making sure that you've vetted the builder, making sure that the builder does have a track record, and just understanding a little bit about how the builder operates his business. Now, the volume builders obviously speak for themselves. You can see online, there's multiple reviews, there's multiple forums, there's people that you can touch base with, and I guess have that type of insight. But with the private builder, definitely a little bit more challenging, because they might not have much of a presence, they might not have done many jobs, or they're building, they're kind of structured that the way that they work in their business might not be the best, or it might be fantastic. So I think it's just about the vetting process and getting high level consultants around you to make sure that you are making the right decision with that particular person,
So building a home in 2026, what should someone know before they sign off on a contract?
What should someone know before signing off on a contract? I think, again, passing the contract onto a solicitor to make sure that, all their due diligence is met. we found during COVID that a lot of builders were able to extend their time frame of construction from normally 12 months to longer, just due to obviously the delays that were happening during the lockdowns. So I feel like keeping the builder accountable is important to make sure that their build time frame within the contract is feasible for both you and him or the builder. So I feel like it's very challenging because each builder has their own style of how they construct. So I could give you a piece of advice for one builder that does not apply to 10
Another
builders,
one,
you know?
yeah.
So I feel like, yeah, it's all about just obviously having the relationship with the builder and having a good team of consultants in your corner to understand that what you're getting into is the correct way, is the right way, and keeping the builder accountable is very important at the same time.
So times are changing. Houses are changing. They're becoming far more energy efficient. Cars are becoming far more energy efficient. Is that the trend you're seeing as well? These new
We're definitely seeing a big push in electric, for example, cooktops. Whereas now for all the developments that we've done, Julep, we've always done gas cooktops. We just like the functionality around it. Yeah. So gas ducted heating, we obviously like that more than split system. And gas cooking is always ideally more preferred by a lot of people, I would say.
But some of these states are now coming up with
only electric.
Yeah.
Yeah. So
Which
what
are-
we're finding now is obviously that challenge. And previous to that, when we used to connect gas meters, this was last year, when we used to connect the gas meters to each property, it always used to be free of charge. So we'd call the gas distributor in the region. They would come up, do the below grounds, connect the meter. It was all free of charge. So now there's actually a $2,300 fee per property
Wow.
that we need to pay to get the gas installed. So it's kind of an incentive that the Australian government wants to do to remove gas and keep everything electric. So we are seeing definitely changes in that space where, they want to go electric. But I feel like, especially around the heating side of things, Julep, everyone would agree that gas ducted heating would definitely be far better for the house, far better for practicality, as opposed to split systems. That's what we kind of get the feedback from,
Fair enough.
So
if I'm an investor, I'm coming to you tomorrow and I got a choice between building a new home, or buying something established.
Yep.
What would you tell me?
So after the budget has announced, obviously with negative gearing,
Yeah.
I like to look past the negative gearing side of things, Julep. So let's say, for example, let's have two case studies. So we've got one person that has a property, decent area, very minimal growth year on year, but he's able to claim negative gearing because he's got a brand new property, right? But then let's say we've got another investor where they're buying in an infill area, older house. Yes, they're going to be negatively geared. Yes, they won't have those tax advantages that the new property does have. But let's say the upside that he might make $200,000-$300,000 on that property. I guess it depends on the style of how you want to invest. Are we investing more long term? Are we investing more short term? Do people care about the equity that they're gaining, or do they care about potentially just cash flow? Some investors only want properties that are positively geared.
Yes.
So what happens then?
Yes.
So I think
can't negative gear at all.
you can't negative gear at all. So yeah, obviously they're positively geared. So I think at the end of the day, Julep, it kind of comes down to what the investor wants, what they want to achieve. Do they want to have a property and land bank it 40, 50 years, give it to their kids and their kids can deal with it? Do they want to make quick money to roll that money into another project? I think it kind of depends on where they're at, I've always been the type of person to buy and sell. I've never been the type of person to kind of hold and keep and play the long-term game.
I'm going to put you on the spot. What makes a good investment from a builder's perspective?
A good investment. So I definitely feel something that does have the opportunity to be developed. We were having this chat yesterday, Julep, whereas the owner-occupier, depending on the area, will pay sometimes out of emotion, but sometimes they only have a particular budget that they're dealing with. So let's talk about the greenfield areas, because that's where we predominantly deal with. So if we look at an area like Mickleham, the owner-occupier may pay, potentially $700,000 for the property. The investor wants to pay $650,000, but the developer, if he can see that there's a margin in the project, he may pay $750,000, he may pay $800,000, because he knows that there's a return that he can potentially make from that particular property. You know what I'm saying?
More than what they're spending.
Yeah, so it kind of depends on certain regions. So if we look at Templestowe, the developer would pay the least, and then you probably have the investor that thinks long term, And then you have the owner occupier that will pay the most because it's a lifestyle for them. So it just kind of depends on where the investor's at, what their budget is, where they're looking at, and what their long-term goals are, I guess.
So do you find things like the dual occupancy products or townhouses or small developments still attractive opportunities?
Um,
I wouldn't say apartments. I'd probably stay out of apartments for now, but
yeah. I would definitely say, look, dual occupancies are really good when construction is very feasible on the development. We obviously find that anything 2 or more, you've obviously got to go through town planning, Julep. Town planning can alter a lot of your ambition on that particular development. So you might have one particular thing in mind, and then town planning comes along saying no, 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 no. They might give you 3 yeses and 7 nos. So we find that if you're going to get into that space, it is 9 times out of 10 at the mercy of the council. The council will have their prerequisites about there are certain guidelines that you need to achieve. The architect can do their best to achieve those guidelines, but sometimes we do find that the council does have a big say in terms of what can be developed. So in terms of, gaining equity on the particular block and thinking more long-term, I think the dual occupancy is good because obviously now you've got 2 forms of revenue. You can still claim the negative gearing if it is negatively geared property. And you've obviously got 2 assets instead of the one. And we do find that they are in quite demand, especially depending on the area that you're located in, because your own street frontages, your own driveways, no body corporate. The dual occupancies are quite good in that respect, as opposed to going 3 or 4 or 5. You're obviously ticking into body corporate and shared facilities. So we're having that kind of debate, but yeah, it just depends again on what the investors kind of achieve, what he wants to achieve. Yeah.
fair enough. So be my fortune teller again. Where do you see Melbourne's housing market in the next 5 to 10 years?
I think a lot of areas will have massive growth, Julep. I feel like, as I was speaking to you some time ago, Julep, is that when I was in finance, I was fortunate enough to work with Sam White, the owner of Loan Market. And I remember I asked him a question to say, if you were to share some light out of your generational experience within real estate, what would you give me? And he was saying, Maroun, always buy your house through a private sale and always sell it through auction. That was the first advice that he's given me. And the second advice he always gave me was always buy a house when people are selling. And when people are selling, sell your house. So what he's trying to say to me is that when people are panicking, that's the time you need to buy. And when people are in joyful moments and, all over the world, that's when you need to sell the property.
Yes. So always buy a house when people are selling.
Yes.
Always sell a house when people are buying.
Yes,
That's what
correct.
you're saying, right?
Absolutely.
Yes. Yeah.
Absolutely. So I think,
So currently the market, where are we in terms of that equation?
look, I
Are we
feel
in a
like,
market where people are selling?
yes, yeah, we're definitely in a market where people are worried.
Mhm.
We're definitely in a market where people are going through financial stress, Julep. So I think at the moment it is an exceptional time to buy. Obviously, depending on the region, depending on the price point and everything like that. But if we look at Templestowe, for an example, given that we've obviously done a few projects there, Julep, is that back during COVID, you would have bought a site for 1.6 million, just an old standalone house that you need to knock down, develop, put 2 units, put a knockdown rebuild or whatever. So you're at 1.6 million during COVID. Fast track to after COVID, maybe let's say 2024, 2025, houses were sitting around the 1.3 mark. But you go now, you can probably pick up a house for 1.1. And what we find is that Templestowe's never gone to like 800,000 for many years now. So I feel like it's lost a lot of its value. To buy at this point of the market, yeah, maybe the market might slightly go a little bit less, in the coming months. But in my professional opinion, I would say, Julep, is it's only a matter of time before it goes up again. And the minute it's stimulated, the market's stimulated again, whether it's interest rates, whether it's inflation reducing or whatever it may be, we find that, buying that property at 1.1 would be worth 1.4 very quickly, potentially in 12 months, potentially in 18 months. So what we're finding is that Melbourne market is severely impacted over the last, I'd say, couple of years, especially a couple of years. But every time the market's impacted, we know that it has to rebound. It's proven in history. It's not
Cycle.
something that, it's just a cycle, just a phase,
Cycle,
I guess, that
yeah.
the property market's going through, So I think, definitely a lot of room for recovery.
There's definitely potential in Melbourne, and it's a no-brainer.
Yeah, correct. Yeah,
In
that's
my
right.
view as well.
Yeah.
It's if those who gets in now will be the winners at
We'll
the end
be
of
the
the day.
winners. Yeah, absolutely.
Similar to those who got into people at places like Brisbane, Perth, many years ago,
Yeah,
who are now getting the crops out of that
that's right.
investment.
Yeah.
Melbourne will be similar, no doubt about that. Um, if you had $1 million today,
Yep.
where in Melbourne would you go and invest?
If I was to place myself as just a generic investor,
Yeah.
not a builder, not a developer, just a generic investor, it is a good question, Julep. I probably would still go down to the Geelong region, just due to the amount of sites you can potentially buy with that 1 million. Obviously depending on borrowing capacity and what your serviceability is with the bank and all that, you could probably buy multiple properties in Geelong with that budget. And I like to diversify the risk and not put all of the money just in one particular property and hope that that property does go up. Vacancy could be an issue if you're renting it out. Local demographics can change. For example, school zones. So a lot of people would put their money in Doncaster East because Doncaster East is in a particular zone. But when the zone had changed years ago, due to the amount of population coming into the area, what happened to those properties? So you're at risk, I feel. And I would always like to diversify, go for the cheaper end, and buy multiple of them if you can afford. Around 600K or less would be ideally where I would, align investors to go into.
Considering you're a builder, what's the biggest myth people have about builders?
Oh, the biggest myth, I would say that they would probably call the builder greedy, I would say. And, obviously with variations or price rises or things of that nature, but not to defend a lot of the builders out there, but to play devil's advocate, I think everyone in the project needs to win. I think the developer or the builder, the developer or the landowner needs to win. And I feel like the builder also needs to win. So I feel like, as I was talking about labor problems with a lot of the trades going into commercial, what I do find is that can happen at any moment, Julep. So we can pay $3,500 for a frame to get done for a 20 square house. And then all of a sudden it goes to 6,000. So the builder's margin obviously gets affected along the way. And there's things that you can only quote so well. There's a lot of things in the uncertain. As you can see in a lot of the government projects, they say, look, it's got to cost $1 billion. And then they blow out 500-600 million. So things happen. And I think, honestly, integrity of the builder is very important. But I think that, the biggest myth is to think that a lot of builders do try to like cash grab and try to grab money where they can, where, a lot of honest builders just want to make a good return on the development. And obviously the developer needs to make a good return as well. So it's you both got to play ball, I guess. Yeah.
In terms of the most ridiculous request you've had or most unusual request you've had from somebody who wants to build a house with you, what was it?
Look, because we haven't done client work, Julep, I have to speak about another builder that I was
Yeah.
speaking to.
Yeah.
So he had a property where he was going to build for a developer in Craigieburn, and it was going to be boundary to boundary. And I think that it was a very weird request because it was boundary to boundary. We can't get windows on those boundaries because we're sharing boundary walls with neighbors. So obviously not being able to do windows on the boundary, he's decided to do skylights in each bedroom. And I found that a bit weird because obviously you've still got that natural light and you can have an openable skylight, but I found it a bit strange that there's no actual window in the bedroom and it's only just a skylight for natural light, So yeah, I think that was probably the weirdest thing I've ever heard of, yeah.
Considering our program is pretty much sort of targeted towards investors, this is going to be my final question to you as well. What is the, looking back at your career, what advice would you give someone who wants to build wealth through property in Australia?
Look,
This is your stage.
yeah, the biggest advice I'd probably give, Julep, is you definitely need a good team. You definitely need a good broker, number one. The broker's going to be able to tell you what you can and can't do. The broker's going to be able to give you a solution to, I like looking back on our history, Julep, we look at the minute we could get more lending is the minute we could do bigger projects and make more money and obviously so on and so forth. So lending is a big derivative of property development and property investing. The more lending you can safely get would determine how much you can achieve in real estate. So I feel like that, obviously your employment, your income, everything like that is very important. There's no good having $10 million worth of debt if you've only got a 100K salary where you can't service that amount of debt in case rental doesn't cover it or in case there's vacancies or whatever it may be. So employment, if you're self-employed, your income, whatever it may be around income base is very important. The second best thing would be definitely your mortgage broker would definitely need to be very equipped to know what he can and can't do. We can see very big differences between one broker and the other or one bank and the other bank. So definitely finance is a virtue in real estate. Thirdly is probably your solicitor, your accountant, your town planner, your architect. These other consultants that help you decide whether or not this return is going to be great or not. So I feel like a lot of people just want to be like, oh, I found this on realestate.com or I found this on Domain. I just want to purchase this property. But what we find is that they haven't done all the legwork that's in the back end. And they purchase this property and then after 2-3 years, they can't afford it. They sell it at a loss, or they can't afford to maintain the mortgage repayment. So they're forced to sell it. And that's what we're kind of finding in this Melbourne market at the moment, is because I feel like a lot of investors have gotten caught out. But it's very important to know where your financial capabilities are, your broker, having a good relationship with a real estate agent or agents in the area that you're looking at buying in, your town planner, your architect, your solicitor, your accountant. It's very important to kind of get those fundamentals there. Once those fundamentals are there, you can always build on that. So we find that instead of jumping the gun and, just purchasing for the sake of purchasing, these fundamentals definitely need to be there. And like I always tell everyone, you can't build a house without a slab. So the slab needs to be kind of those foundations. Once those foundations are honed in years after years after years, it only leads to more success by having this party on board with you, So I feel like it is very undervalued,
Yes.
These people.
Yes.
Very
Services
undervalued.
That they provide,
Yeah, the
100%.
services that they provide. So
Yeah.
yeah.
Well, I think you're right. I think they are undervalued and they do some wonderful work, some of those professionals out there.
Yeah.
And it is what you're saying, building that foundation,
Absolutely.
does lead to success, and emotions needs to be out of the way. And, you need to really quality control what you do and make sure you got all those pieces in place.
That's
before
right.
you go into a decision such as this. It's been a pleasure.
That's
having
right,
the
Jules. Thanks for having
director
me, man.
of 98 Developments and the co-owner of O-Build Building Group, Maroun Abou-Afech, joining us today in Monopoly with Grit. Thank you so much for joining us.
Thanks for having me, Jules. Appreciate it. Thank you.
Monopoly by Grit.